Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day. Before we dive in, standard disclaimer, nothing here is investment advice. Do your own due diligence. And today's guest is the president of Noble Plains Uranium, a U.S.-focused uranium exploration and development company advancing a portfolio of high-potential projects amenable to in situ recovery mining. It's Drew Zimmerman. Great to have you back on the show.
Yeah, great to be here with you, Jesse. And I do have to apologize. I know you've got your swag out now, and I don't have a commodity culture mug, but next time I will be sure to have one for you.
Yes, please do. 100% quality guarantee. If anything is wrong with the product, we'll give you your money back or ship you another one. Now, let's start this interview off with a high-level macro overview of the uranium picture at present. Obviously, we're seeing the equities wake up, a ton of bullish news behind the sector. What are you watching most when it comes to the uranium space that you think more investors should be paying attention to?
Yeah, that's a very difficult but good question. I think the hardest thing to get a grasp on right now is just the amount of news flow that we're seeing in the nuclear and the uranium space. And it really is the culmination of everything that I think is so important. So, it's easy to hear, about tech investing in nuclear power one day, and then you've got Trump's executive orders the next day, and then you've got a turn in policy in Germany the next day. So you kind of go from one to the next to the next, but it's really, continuing to add all of those things up on the demand side for uranium and for the nuclear power industry that I think is so impactful. There's just been so much news, even just year to date, in the sector that just continues to build such a bullish sentiment in the space. And I think that is the key piece. It's easy to sort of let this data wash over you, or these data points wash over you, but to really look back and go, wow, this has continued to build in a very, very big way. And I think what we're starting to see now is those inflection points in different parts of the industry. So when you look at where, the SMR companies are trading, a lot of them have done, 4 or 5x in the last couple of months since the executive order. So you've got different pockets of the industry really starting to move. And I think that's where it's important to see that for us at the front end of the uranium cycle, it's a bit of a pull that you get from these bigger things happening first, with, already existing nuclear power plants and small modular reactors, and then the big producers. And then again, I think we'll see it pull all the way down to the explorers and developers. So I think that's the biggest thing, is just really doing the homework to understand how much good news has come at this sector over the last couple of years, but even, so far this year.
Well, the spot price of uranium has tended to be trending higher, coming off perhaps what could be a bottom in this cycle. Spot versus term versus the futures market that doesn't really work. The pricing mechanisms for uranium make it very interesting and difficult to decipher, something I want to get into a little bit later. But first, I want to talk about the Sprott Physical Uranium Trust raising $200 million in an oversubscribed financing. A lot of people were talking about, SPUT's going to have to sell pounds to cover their overhead costs. There was that fear out there in the market, and here we are with an oversubscribed financing, that 200 million going to be used to take more pounds off of the market. What are your thoughts on this, and what catalyst do you think could drive the next major move higher?
Yeah, absolutely. I mean, Sprott has become a big player in the physical space, and because they operate in the spot market, that tends to be a little bit, less pounds that transact there, has become very, very important, and important because it's also a sentiment of the industry. It's, a vehicle that investors use to gain exposure to the underlying commodity, because there is no, futures market like there would be in oil or gold. So I think the important thing started in May when they actually raised, I think it was 24 or 25 million with their ATM. So again, being able to then say, hey, we've got enough cash, we're not going to be selling uranium, but also showing that they could raise money. And then, again, just a week ago, coming out on Sunday night saying, hey, we've got $100 million financing out, and by Monday morning that was upsized to $200 million. So I think the other important piece is, not only did you see the traders front running that all of last week in the spot market, because again, the financing didn't close until Friday, so they didn't have the cash until the end of the week. But I think it's important to show that there was, significant players willing to come in and put money into the Sprott Physical Uranium Trust, and that was led by Canaccord. They're obviously very in touch with the space and what's going on. So I think it was not only a bit of a catalyst for the spot price to put a player in there that's willing to soak up, call it the extra pounds that are available in the spot market, but also a show that investors are willing to come back in a pretty big way into the uranium space and say, yes, beginning in 2024, spot was 106. At the time, it was, 70. And they're willing to step in and buy a lot of uranium at $70 a pound because they think it's going to be going much, much higher.
Well, I also want to talk about the fact that we are seeing a global uranium supply deficit that is now becoming much more than just a theoretical concern. We're seeing Kazatomprom facing issues, sulfuric acid shortages. They're supposed to be building a sulfuric acid plant. I believe that's coming perhaps in 2026. Niger remaining in political limbo. We continue to see things deteriorate in that part of the world, putting a lot of projects into question. Australia, as we know, a government that's very anti-nuclear, and also very anti-uranium mining in many parts of the country. There's been issues with some U.S. producers. I mean, the list just goes on and on. So where will the uranium actually come from this cycle, in your opinion?
Yeah, I mean, that's a very good point. And again, when we talk about most of the uranium that trades, it is in the contract market, not the spot market that we were just talking about with the Sprott Physical Uranium Trust. But to me, it just comes back to price. You have to incentivize projects to be able to move forward, to be able to finance themselves, to be able to move forward. And a higher price can incentivize speed. And I think we're getting to that point in this cycle where we are so short of uranium supply. And again, we're getting close to about 200 million barrels or pounds a day of burn, or no, sorry, not a day, a year of burn, and 145 to maybe 150 million of physical production. So needing to really fill that gap and then keep pace with mines that are coming offline and the growing demand side. So again, what is the one thing, the best fertilizers for tomorrow's crops are higher prices. And that rings true in any commodity and in any commodity cycle. And, we saw a little bit of that with the run up in 2024, but I think what we're going to see now is going to be significant in a price run up because you have very inelastic demand. And that inelastic demand is a small part of what the overall operating costs for a nuclear reactor are. So, it's not something that, the demand side is going to turn off anytime soon. And in that environment where you're short of supply, we see prices having the potential to run much, much higher. And that is where the uranium will come from. It will, incentivize, people at the front end of the pipeline, like ourselves at Noble on the exploration side. It will incentivize, Cameco to bring other operations back online. It will incentivize a company like NextGen to, hurry up and build the Arrow deposit. All of that comes with higher prices and more incentive to move faster.
Well, let's talk about the prices for a moment. I'm just wondering how you approach the pricing in the uranium market at present, because most investors watch the spot price. We know this is a thinly traded, fairly illiquid market, moved around by a handful of entities. And then, of course, the term price, sometimes tough to determine exactly what's going on there due to NDAs attached to contracts. How do you approach the price of uranium? Do you watch the spot price closely along with the term price?
Yeah, I mean, I think you have to watch the market as a whole. So you have to understand where spot price is just because it is so important. A lot of investors, especially on the retail side, will pay attention to where spot price is. But then when you're trying to build confidence in where you think spot price goes, then you're looking at, the SWU contracting, the enrichment prices, the long-term contracting prices. And when you have had over the last 2 years, all of those prices continue to run forward and not have the pullback that the spot prices had, that's where you get the confidence in this cycle, not only the longer term outlook of just supply and demand, but even what's happening there, and understanding that utilities have a contract book that they have to fill. This is a commodity that they consume, and we know that they're not contracting to that full cycle. I mean, year to date, I think we're at about 25% of what they need to contract in the year. And that's been happening over the last several years. So we think there's a lot of catch up that needs to happen. And in any market, it's a little bit of, we can wait and see until we can't. And then you have to have players that start to chase. And again, people that think prices will run higher, race out to contract now, and that pushes prices even higher for the people that were waiting, and so on and so forth. So there's a lot to go into it, but again, I was listening to a great podcast with Mike Elkin and Justin Hune, and they just said it so simply. The math is the math, and there is no changing it. And when you look at what happens when we start to see prices move, I think that's what gives us the confidence that we will see prices running higher. And that's been, part of the strategy that we have at Noble, is to be able to take advantage to those prices.
Great. And that podcast was my other podcast, the VRIC Media Show, where I interviewed both of them. Very interesting conversation. I think they shed a lot of light on the sector. Now, I want to get your thoughts on the uranium equities starting to wake up, because as we talked about at the top of this show, we have started to see an increase in the prices of these equities after quite a prolonged slump. Many investors came into this space 5 years ago. They expected the thesis to have already played out, so that there was a lot of frustration around there. Do you think this cycle has taken longer than expected? Are we right on track, somewhere in between? How are you seeing things?
Yeah, I mean, I think if you look back to 5 years ago, one, it's important to realize that a lot of the big producers or developers, from 5 years ago are still, 4 or 5 times higher at today's prices than where they were then. So there was definitely some gains to be had. But I think when you look at this cycle, the thesis that was held 5 years ago in 2020, if that was the only thesis, it may have topped in 2024, and that would have been it. I think the difference is, over that 5 year period, the story continued to build and change so dramatically on the supply and demand dynamics, and the amount of growth that we're seeing in nuclear demand, because of almost a unseen growth in electricity demand. I mean, in developed nations, we went through almost a couple of decades without any real electricity demand growth because we were getting more efficient. So now we're seeing just a huge growth story that wasn't even there 5 years ago. And again, that's tied to the electrification of everything, but also the significant demand from data centers and AI data centers. So I think that when you look at the cycle now, it's always changing. And I think the good thing for those of us involved is it just made this cycle way bigger than people would have contemplated 5 years ago. And when you have a bigger cycle, you get smaller cyclical pullbacks within it. And that's very healthy. And I think that's the exciting thing that we look at here, is to say, the first 4 years was a great run up. We had, a year and a half pullback, and now we're, resuming the trend in a much bigger cycle. So I think that is the exciting piece that we can look forward to in the uranium and nuclear sector.
Well, let's talk about how Noble Plains Uranium fits into the picture. Could you start by giving us an overview of the company?
Yeah, absolutely. I mean, we came with the idea to build out a company thinking that we could capitalize on this pullback that's happened over the last year and a half, and that there will be a lot more growth ahead. And how do we best position ourselves to have leverage to that cycle? And that was building out projects that are removing a bunch of the exploration risk by taking on historical projects that have, a lot of work done to them, that we can go in and, confirm some of those drill holes and try and build out a compliant pound in the ground resource rather quickly and for rather low cost, and have them be ISR amenable in agreement states. So those two things, one, reduce our environmental footprint, and two, speed up the permitting timeline and lower the capex of the mining projects themselves. So we've started to do that, but again, it's been a company that's been purpose built to have leverage to uranium at even at $75. This model makes a lot of sense, and we think the exciting thing is as we grow our pounds in the ground and as uranium prices rise, like we think they will, then our leverage only grows, and that's the exciting proposition that we have for shareholders.
Well, I want to read a compelling statement from your investor presentation where it says, "Our strategy is simple. Build an inventory of pounds in the ground, not mines. Generate maximum leverage with minimal dilution." Walk us through the strategy there and how you plan to execute it.
Yeah, absolutely. Again, sort of as I alluded to at the top, was just being able to take on projects with less exploration risk, known drilling. An example, we just acquired the Duck Creek project, and I'm sure we can get into that a little bit later, but 4,000 drill holes in that project. So being able to take projects that have known workings, known mineralization, and upgrade that with new drilling and confirmation drilling to be able to get that compliant resource in the ground. And we think, again, as this market moves forward, especially pounds in the ground in the United States, where they have, very little domestic production. We're talking about consuming about 48 million pounds a year and producing less than 1 million pounds at the current time. So being able to build out those pounds in the ground, we think is going to give us a lot of leverage to the uranium cycle. And again, we want to do that taking on less risk, be in the right states, in the right jurisdictions that we think have a clear path on permitting. And again, a mining method that has a lower environmental footprint and a faster timeline and lower capex to be able to bring that forward. Because again, even as we build out these pounds in the ground, you do need that pathway to production. But for us, if we spend our dollars on, acquiring and confirming mineral resources in the ground, where we build out into, the double digits of tens of millions of pounds, we think that's where the significant leverage for our shareholders will come from, that value of that uranium that's still in the ground.
Well, let's talk about the acquisition of the Duck Creek project in the heart of Powder River Basin Uranium District. Walk us through the details of that transaction and what they mean for the company moving forward.
Yeah, this is a big step for the company. We have two existing projects in the Shirley Basin, but the Powder River Basin was a big project for us. It's right on the north end of Cameco's Smith Ranch. They've got 32 million pounds in the ground there. So again, a very productive region. Smith Ranch ran until 2018. It's on care and maintenance now, but again, a property that we think will come back online as prices start to move higher. And for us, it was exactly what we were just saying, having 4,000 drill holes on a 3-mile mineralized trend that was just very compelling for us to be able to pick up, historic pounds that we think we'll be able to bring into a compliant resource. And for us, it was, moving quickly. We've done a lot of due diligence on the project over the last couple of months, but being able to bring it into the public space and be able to have a completed 43-101 on it in the near term will be exciting, because that will give us that historic pound in the ground number that we can continue to build off of, and that path forward on how we bring that into a compliant resource. So again, just being in Wyoming, an agreement state, the Powder River Basin, which has significant past production and significant production potential going forward. I mean, we've got 3 UEC projects around us and a GTI project to the west that also have significant pounds in the ground. So it's an upcoming area that is all amenable to ISR. So again, that lower environmental footprint and near term permitting process to be able to get into production. So it was a big step for the company, and very happy to have that out in the public.
And Wyoming, probably the best state in the United States to do a mining operation, do exploration, anything to do with natural resources, which leads us to your two other projects in the Shirley Basin. But it should be noted that this is a very important uranium producing region as well. Talk to us about the details of those projects and your next steps for them moving forward.
Yeah, as you said, Shirley Basin, an incredibly important region. I mean, they've produced over 52 million pounds historically from that basin itself. Our Shirley East was the first project the company had, I think a kilometer away from Kerr-McGee mine that produced 22 million pounds. That was a shallow open pit mine. So again, being in the right jurisdiction with these land packages, and then we acquired our Shirley Central project. So again, altogether, we've got about 8.5 square kilometers, 101 mineral claims. And the Shirley Central is right on the border with UR Energy that's bringing their Shirley Basin project into production. So they're constructing that project right now, 8.8 million pounds in the ground. We're evaluating more of the historical data on that project. It already has, very tight clusters of historical drilling that, again, we're going after higher grade areas. So those 5 bullseye targets, as we're calling them, are very important near-term targets that we think, again, a little amount of follow-up confirmation drilling can do a lot to prove out what that project can hold in very short order and for very good ROI on the drill dollars that we have to spend. So to have 2 active projects in the Shirley Basin that again is such a prolific area, and seeing infrastructure get built out adjoining our projects is key for us to be able to move things forward. So an exciting region to be in both the Shirley River or Shirley Basin and the Powder River Basin as well.
And when it comes to upcoming catalysts for the company, aside from everything we've discussed so far, what else can shareholders look forward to at all 3 of your projects and at the company in general moving forward here?
Yeah, I mean, again, I think it's been less than 2 weeks since we've done 2 acquisitions. So again, we are working hard, and we have a pipeline of projects that we're continuing to evaluate. So part of our strategy will be continuing to find projects that make a lot of sense, that fit into our mandate that we've explained, and check the boxes to be able to really create value for our shareholders without using a tremendous amount of capital to do so. When it comes to our existing projects, like I said, we're waiting for the 43-101 to get completed on Duck Creek. That will be an exciting piece of news for the market, because that'll outlay the technical merits of the project, the historical pounds in the ground, and sort of give the market a number to realize that we're going to go after for a compliant resource that, again, in a rising uranium spot market, will create a lot of value for shareholders, especially when you're coming from a small market cap like we are. Again, building from the ground up to be part of this uranium story gives us a lot of upside potential. And then our Shirley Basin projects, again, right next to UR Energy, taking advantage of some of the historical work that's there. So we're hoping to be able to put some more historical work together that we could release to the market, and then have the permitting get completed so that we can get out there and do confirmation drilling and some exploration drilling later this year as well. So a lot of key catalysts coming near term, both from the projects that we have already, but again, also the pipeline that we're working through on the M&A side to be able to continue to grow our portfolio, that will give us even more leverage to a uranium market that we think is just getting started.
Well, Drew, I'll end by opening the floor to you. Is there anything we haven't yet discussed, or anything you think it's especially important to emphasize about Noble Plains Uranium that potential shareholders should be aware of?
We've covered a lot of ground here, Jesse, and I think maybe just to end is the summary that, there's a lot of reasons why we think the uranium market is continuing to build. I think you're seeing that upstream. I mean, Cameco, which is vertically integrated, all-time highs. Some of the SMR developers, we're seeing financing come into the space. We had Westinghouse. As much as we talk about the big 200 million USD SPUT physical uranium trust, I mean, Westinghouse is talking about 10 reactors and $75 billion. I mean, those are big numbers, and those are starting to get financed. And that's just going to pull the market, and it's starting at the top and working its way down. So, we're excited about the potential for when it comes to small companies like Noble Plains. I mean, we're a 4 to 5 million market cap company right now. There is a significant amount of leverage to the upside that we can have, especially if we're able to execute on the roadmap that we've already started to move on, where we can move historical pounds into a compliant resource category. We've already started to see some M&A in the space. We saw it in the US with Premier American and Nuclear Fuels. We saw it today with Forum Energy and Baseload Energy up in the Athabasca Basin. We think this is all coming together, and hopefully, again, like any company and story, you need a little bit of luck, but we think we have timed it very well, and we're leaning in hard and we're working hard, and we think that's going to pay significant dividends for the company and our shareholders in the months ahead.
Fantastic. And I totally agree on the uranium market. It seems to me that there is no commodity out there with a better setup than uranium at present. Drew, I'm going to put a link in the description below to the Noble Plains Uranium website as well as social media profile so people can follow along. It's been a blast having you on. Thanks so much for coming on and sharing your knowledge with the audience.
It's great to be here with you, Jesse. And like I say, I will have a mug next time.
Commodity Culture is a series on commodities and natural resources. If you would like to see more, be sure to subscribe and hit the bell notification so you're always up to date with the latest episodes.